To catch up with the reasons why this market keeps on heading higher, we have Simon Bond from Morgans, and he joins me in the studio. Hi, Simon.
Hi, I'm well, thanks.
Isn't it great that stocks are going up? We had this correction fear a week or so ago, and bang, they're up again. How come?
2 weeks ago, we talked about buying the dips.
Buying the dips.
And we said, well, you know, what do you buy? Well, you buy quality stocks on down days. And let's just have a look. ANZ, I think, hit a record high earlier this week. Woolworths was at a record high.
Yeah, I regret that. I wanted to get it at 33, missed it badly. Yeah, go on.
Even Xero's going up.
Yes, 25 to 30. Yeah.
But one thing that I do think is very important is we put out a note last week that was authored by Michael Knox, and Michael's
my guru on Monday nights.
Yeah, who's a very entertaining fellow, as you know.
Yeah, and smart too, but
he put this note out prior to the inflation data that was released.
Yeah, that was Wednesday.
And just to go with what he said, his final paragraph said, "Our view remains that there will be no increase in Australian interest rates before the final quarter of 2015.
Hoo-ha! That's huge. See, I'll have to argue with him on that, but I hope he's right. But I don't think it's. I can't see that. But still, he's pretty smart. Yeah.
Okay. So, if we say he's going to be half right, what stocks do we buy? Well, it's the yielding stocks, it's the quality stocks that offer sustainable yields. And we sound like a broken record.
But it's been a good broken record.
And that's the thing. People are out there trawling the market looking for these biotech stories and the stocks that are going to go up 5-fold or 10-fold. The good quality Australian businesses with sustainable dividends and sustainable earnings
still the way to go.
To grow in a low inflationary environment where the Reserve Bank would be breathing a sigh of relief, saying, thank God we don't have to tinker with interest rates. And the other thing I think that people should be doing is saying thank you to the deflationary companies and the deflationary businesses that have been keeping a lid on interest rates.
Give them an example, Simon.
Google, Apple.
The internet companies.
The internet companies that continue to keep prices down, to continue to put pressure on margins.
Yeah, it's hard for retailers, but it's great for inflation.
But these are the businesses that are encouraging Australians to go out and buy property because they can look at the future with some sort of certainty as long as they've got the security of their employment and say, okay, well, interest rates for the foreseeable future are going to remain at levels consistent with my ability to pay off a property.
We're very rational beneath it all, aren't we, Simon? Amazingly rational.
Well, it hurts some people. I understand that a low interest rate environment hurts the retirees and the people who need the money to live on.
Yeah.
But if you're not putting your money in the bank itself, there's still some very good yielding stocks. Telstra still stands out as a classic play. Some of the fixed interest securities that the banks have been issuing, you've got to have a look at the terms and conditions, of course.
Yeah.
But it all augurs well for a rising tide to continue to lift the boats.
Yep.
Now, I also believe that Janet Yellen has been misunderstood.
That's the Fed boss?
Yes, on her messages. And I do believe that she is the doves of the dove. Again, we've talked about this before. She's more concerned about unemployment than inflation. So the inflation globally, inflation remains within target.
Yeah.
But going back to that call of Michael Knox, I can't think of anybody out there, any of the other economists out there who are
saying that.
Within a hoot of saying...
Some think that rates could fall. I think Macquarie still thinks that, and I think JP Morgan think a fall could happen. But still, it's an interesting call. And it also creates this for our next discussion. It will help the Aus dollar fall if we don't raise interest rates. And a guy called Adam Boynton, who is the chief economist at Deutsche Bank, he thinks the currency could fall 66, 69 cents. Now, if that happened, there'd be a lot of great companies that benefit from a lower dollar. And I've asked you to actually pinpoint the ones that you think would benefit if the currency got as low as, say, 69. But I think even if it goes as low as 80, some of the names you'll come up with will benefit. It could be a long-term play.
Well,
What have you come up with?
they're the old favourite. I'll stay away from the resources for the moment. I'll
Okay,
come
fine.
back to those.
Yeah, go to the other ones.
But let's have a look at your ResMed.
Okay.
They were up.
Name them first in case we run out of time.
Okay, ResMed,
Yeah.
Cochlear,
Yeah.
Brambles,
Yeah.
James Hardie, Computershare, CSL,
Yeah.
BHP, Rio.
Yeah.
Any of these good
Will
businesses
benefit from a low dollar.
that have offshore earnings
Yeah.
and increasing their business overseas. The negative about that is that obviously the more earnings that come from offshore, if they don't have sufficient franking credits in their franking account,
Yeah.
then you stand to lose some of the franking.
Are any of those part frankers that you know, Simon?
I actually can't. I didn't look. I didn't.
I know
Look
it's a
at
tough question, but someone has to answer
Someone
it.
has to. I should have.
Okay, well, the point is that if people are doing their homework on these stocks, and our argument basically is here that if the dollar is to fall, you might be better off getting into them now before the dollar falls, because when the dollar falls, every mug and his dog will be chasing those sorts of stocks
Well, you prefer to be too early than too late.
on quality
But
performance.
a lot of the time, it's a lonely place to be because you're sitting out there and you're waiting for everybody to come along, and
Yeah.
you're lonely having the drink by yourself,
Yeah.
and you think to yourself, well, I've got it wrong. So you finish your drink and you go home, and then a couple of hours later the herd arrives, and again, as you say, it's a little bit late at that stage.
Simon, if someone was considering that kind of play, do you think they should actually put a number of stocks rather than being dependent on one only of those groups? Say, for example, they didn't have any ResMed, Cochlear, CSL, Computershare. Rather than just going for one of them, hoping it does well, maybe put 3 or 4 to give yourself a bit of exposure to all of them.
Perfect strategy.
Yeah.
Again, it's how many times have you and I seen in the last 20 years people come onto the program and say the banks are overpriced?
Too many times. We disagreed.
How many times do we see a pullback in the banks, the 2 steps forward, 1 step back? And again, these are businesses that have significant room to cut costs. We talked about the branch network a few weeks ago.
Yeah.
These are companies that have got quality franchises, quality staff. You're much better off, as we've said before, being a shareholder rather than a customer.
Yeah, they always love you saying that, by the way.
But do you want to sit in ANZ and get 2.5%, 3%, and of course your money is secure, you're not going to risk your capital? Or do you take a longer term view, as you and I encourage people to do,
Yeah.
and say, all right, well, let's wait it out. And now Roger might say, well, this stock's too
You're
expensive.
talking about Roger Montgomery here.
Yeah, or it's too cheap, and certainly institutions will look at that. But longer term, I think it's very, very difficult for any investor to go back in time and say they haven't had a fabulous time owning Australian banks for not just income but also for growth and franking credits.
Yeah, most definitely. And I've noticed that a lot of people who put together portfolios based purely on income, and we're only expecting like an 8 or 10% return, have got something like 20% plus.
Telstra is the classic play. When the future fund was selling,
Pumping it.
it was selling down, and the stock was what 2/3 of where it is now. The yield on it. So if you annualise your yield, and if you bought that just before the dividend, your income plus your growth is far going to outweigh the loss that you're going to have on the interest rate cycle.
Yeah, absolutely right, mate. Well, thanks for joining us on the program. As always, great to see you.
Thank you.
You have a very good Anzac weekend.
Thank you.